Hey, good morning. Welcome. It is 7:30, an hour into the first trading session of the week, and it's a little bit mixed. So over the weekend, we were talking about in the market review, we were talking about how this was so extreme that we are likely to go sideways or bounce a little bit before continuing further down if we are going to continue further down. So one thing that we're going to watch in order to give us a clue as to whether or not we're going to move further down is VIX and momentum. That's something that I wasn't able to look at in the weekend market review because the computer setup just wasn't conducive to it. So let's take a look at it right now. We can see that VIX on Friday, it went up, but really not that much. For such a large movement in the S&P 500 downwards, you would expect a spike in VIX, and that didn't really happen. So that was one clue that that's another piece of evidence that we weren't really going to continue our move downwards today. Today, our VIX is down, but we're still over 20. That's still in fear levels. So we're not out of the woods yet. There's still the possibility of us moving further down. It's just not likely that it's going to happen today, especially with today's action. We already see that we opened maybe 40% of the way up on this bar. And we did try to go higher, but we're right back at that level. So we're just kind of flitting around this 544, 545 level. We did go as high as about 546, maybe a little bit higher than that. But are we going to drop and make a new low today? That's really unlikely. Are we going to go up and hit the MA50? Maybe. But where we end up is probably pretty close to where we are right now, or at least within the range of Friday's bar. So more of a choppy day today. After market, we do get the catalyst of Oracle earnings. And then later on, we do have CPI, PPI. So there are catalysts this week that could cause us to continue to move lower. It'll be a little bit more difficult for us to go higher just because we have all that resistance overhead, and there's still more risk to the downside than to the upside in this market. So let's take a look at our momentum levels and see if that's telling us the same story. So let's do it with StockFetcher. 90-day highs, 85, 90-day lows, 43. So we're very low on both of them. But if we looked on Friday, let's take a look at our 90-day highs on Friday. 106, again, kind of a nothing number. And then on 90-day lows, 147, still just very low amount. So for that huge drop in the S&P 500, only 147 stocks made new lows. So we can interpret that two different ways. Well, not a whole lot of stocks went a lot lower on a huge movement in the S&P. We could interpret that as strength. Or we could say, hey, this number could get up to 200, 300, 400 before we expect it to bounce. And that would be more of a bearish sentiment. But taken together with the VIX and the fact that we did bounce today, that more bearish sentiment is a lot less likely. So we're looking more of chop. And today, with only about 40, I guess it was 47-ish today, then 43 at the moment. So we're really just looking at most likely choppy movement. Of course, the catalyst later this week could change that picture, but for now, we're looking okay. Now, look at how low these numbers are. So if the catalysts are really strong, this could send us into the 100, 200, 300, 400 eventually in either direction before we get a bounce. So that could still be a lot of movement to the downside, not necessarily a huge amount of movement to the upside because of all that resistance that we saw. So we just want to be careful. We're getting a reprieve today, more of a sideways. If there's anything to the upside that has good profits, we'd probably take them today and then see just throughout the week whether or not we start to move lower in the S&P 500. If we look at QQQ, it's very much similar story. If I look at SMH, similar story. We're flirting with the MA200 again. If I look at IWM, similar story, or at support. So it looks like we're moving off of support, which is good. And then the Dow Jones basically completely recovered. So what we're seeing is a lot of attention in the defensive sectors. That's what that's telling me right now. And that is not bullish for the overall markets. For the defensive sectors are doing well and doing okay, and other sectors are not. So let's take a look at our sectors and see how we're performing today. Okay, so this is retail, biotech, XLP, staples, energies. That's interesting because if we wanted a bounce and we wanted to be a really healthy bounce, we would want the things that led on the way down to be bouncing. And those were the tech and semiconductors. But let's take a look at what's at the bottom today, tech and semiconductors. So that is not great news. So for the continued bounce. So it does look like we still have more pressure to the downside, especially in tech. I would not be buying, I would really try to bottom pick tech right now. That I definitely would not be. It looks like staples is the way to go. Or maybe even energy. I would have to take a better look at it. Retail, biotech. That's like a XRT. No, I wouldn't be going into XRT at all. That's high risk. Biotech, maybe, yeah. It could, if it could move up a little here, it's probably looking similar to healthcare. So at the moment, it's like a riskier healthcare, and healthcare is doing okay. But I would want to see it above the EMA 8 again. Yeah, above the EMA 8 or EMA 20 again. And then we were looking at XLP. XLP is looking beautiful. I don't, why would you consider anything else? Just be an XLP. And let's take a quick look at energies. Energies, yeah, still not looking great. Energies, there's risk to both sides. It could go either we have a lot of wars going on, a lot of defense spending, but we're also looking at a possible recession, and we have uncertainty around elections. So I would just stay away from XLE for now. XLP just looks like a great place to be putting your money if you're going to be looking for bullish exposure. And then if you want bearish exposure, XLK. Just looking like it's going to go down for another leg. So, just be aware that there is still a lot of downside risk. XLK led on the way down on Friday and did not bounce today. So that is really, really bearish for XLK. So any upside or bullishly pointing tech stocks, we may want to consider taking those off the table, especially if you get a little bounce in that individual name today. That'd be a good time to take that off the table and just be wary to the downside because there is more downside risk. I'd be hedging right now. I'd at least have some tail risk trade in my portfolio to the downside just in case something weird happens and the bottom falls out. Just there's so much more risk to the downside in the market at the moment. Let's see how S&P is trading intraday. Yeah, we can see that we started bullish with that bounce, but now we've swung bear below that VWAP, and it is very possible that we could continue to move lower. But again, from a broader perspective, as long as we stay above the previous day low, we're kind of okay. But that's a lot of room to fall in the day still. So just be careful to the downside. We're probably not going to break significant levels today in the S&P 500. But if you're day trading, just know that right now at this particular moment, there is more risk to the downside.